In the vast world of finance, there are few regulations as consequential as the Basel III regulations. A beacon of financial stability and risk management, these regulations dictate the operational standards for banks worldwide. The inception of the Basel regulations dates back to the 1980s, a period marked by financial instability and economic turbulence. In response, the Basel Committee on Banking Supervision, or BCBS, introduced Basel I in 1988. This first iteration focused on credit risk, introducing minimum capital requirements for banks to maintain a sound financial footing. The early 90s saw the evolution of Basel I into Basel II. With an increased focus on risk management, Basel II aimed to create an international standard that banking regulators could use to ensure financial institutions held enough capital to cover risks. This version introduced three pillars: minimum capital requirements, supervisory review process, and market discipline. However, the global financial crisis of 2008 exposed the vulnerabilities in Basel II. Its inadequacies in risk coverage, pro-cyclicality, and complexity became glaringly apparent. In response, the BCBS began working on a third iteration, Basel III. Introduced in 2010, Basel III aimed to address the shortcomings of its predecessor. With a strengthened focus on financial stability, it introduced more stringent capital requirements and new liquidity and leverage standards. Basel III also introduced non-risk-based measures and macroprudential elements, which were absent in Basel II. The implementation of Basel III was a gradual process, initially scheduled to be fully in place by 2019. However, due to various challenges and the impact of the COVID-19 pandemic, full implementation has been postponed to 2023. To summarize, the Basel regulations have come a long way since their inception in the 1980s. From Basel I's focus on credit risk, to Basel II's introduction of the three-pillar system, and finally, to Basel III's enhanced focus on financial stability and risk coverage. The journey of these regulations is a reflection of the changing dynamics of the global banking industry and the continuous effort to safeguard it from future crises. And so, the Basel III regulations continue to stand as a cornerstone in the financial world, shaping banking operations and fortifying the global economy against potential shocks. It's a fascinating journey of evolution, adaptation, and resilience in the face of change, and it's far from over. The story of Basel is the story of finance itself, always moving, always evolving, and always striving for stability and growth.